Welcome back, my top 10 favorite people. Hope you're all doing great. I'm genuinely thrilled about today's video because despite all the fear and uncertainty floating around right now, here's what's real. The Federal Reserve is slashing interest rates even while Bitcoin and the S&P 500 are sitting near record highs. Quantitative tightening officially wraps up on December 1st, and the US government is taking on more debt than ever before. Now, I know the last few months of sideways action have been tough for many of you, but honestly, it's not all that shocking when you realize the global liquidity index has been flat for about 4 months straight. Still, looking at what's coming in the next few months, it's hard to imagine a world where global liquidity doesn't rise in the medium term. And when that happens, Bitcoin is likely to ride that wave upward. We just have to make it through the turbulence in the meantime. The market didn't take Powell's comments at the FOMC meeting too kindly. Before that meeting, traders were expecting 4 rate cuts over the next year and were 91% confident we'd see the first cut by December. But after Powell spoke, that confidence dropped. The market is now only expecting 3 rate cuts in the next 12 months, and the odds of a December cut slid to 63%. Naturally, fewer expected cuts mean a stronger US dollar, and that's exactly what's happening right now. The dollar index looks set to climb short-term before eventually cooling off and declining again in 2026. But remember, a stronger dollar puts downward pressure on the global liquidity index since the dollar remains the world's reserve currency. Personally, I think Powell and the Fed are bluffing. Here's what their current rate cut projections show. They plan to bring rates down to around 3.5% and keep them there for a while. But that's almost impossible in an economy that's been hooked on near zero interest rates for over a decade. They're putting on a hawkish act to keep investor enthusiasm in check, but let's be real, the economy can't sustain these elevated rates for too long. My view is that interest rates are headed much lower than what the market currently expects, especially if a new Fed chair steps in by 2026. But rate cuts aside, quantitative tightening ending on December 1st is also a major tailwind for global liquidity. We know the Fed has been reducing its balance sheet over the past few years and slowed the pace of QT as much as possible to keep it running longer. But now cracks in the repo market are forcing them to finally put an end to it. Powell and the Fed can sound tough and try to delay QE all they want, but eventually the bond market will demand their support to keep yields in check and help the US government manage its fiscal situation. With the growing deficits and surging debt levels, we're seeing these federal deficits are expanding rapidly. And for years, we've discussed how exponential debt growth inevitably leads to exponential money supply growth. That debt must be monetized somehow, and the best way to do that is by having the Fed add it to their balance sheet through QE. So even though we might experience some short-term uncertainty and volatility as the Fed continues to talk tough and postpone both QE and rate cuts, we already know where this is heading. I expect this global liquidity index breakout to extend well into 2026 as all these forces play out. So how am I positioning myself for this short-term gloom, long-term boom setup we're in right now? I haven't made any portfolio changes this week. I'm holding on to my cash position to take advantage of short-term opportunities and possibly accumulate at lower prices. But the majority of my portfolio remains in spot holdings because I believe the medium-term direction for global liquidity and risk assets is crystal clear. As long as this global liquidity index breakout keeps moving higher, I have to stay bullish on Bitcoin. We've seen this exact pattern repeat time and time again. A sharp rally followed by a long phase of chop and consolidation that frustrates everyone. Then another quick rally followed by another long consolidation, again a rally, then a long consolidation. And here we are once more stuck in that extended chop and consolidation phase that's making so many investors give up. And this isn't something unique to Bitcoin. We just saw the same type of euphoria play out with gold as it rallied into its recent local top. But if you look at the entire gold cycle, it's been the same rhythm again and again. Rally, consolidate, rally, consolidate, rally, consolidate, rally, consolidate, rally. And now gold is consolidating once again. Gold and Bitcoin have always had this fascinating pattern where they seem to take turns catching the spotlight. When gold cools off, Bitcoin tends to pick up momentum and move higher, and I don't believe this time will be any different. And we've noticed a really interesting relationship between Bitcoin and the S&P 500 as well. The S&P 500 usually rallies first, and during that time, Bitcoin investors tend to complain until Bitcoin eventually catches up. The S&P 500 rallies first, and then Bitcoin follows. The S&P 500 rallies again, and Bitcoin holders get mocked for waiting until it finally catches up. The S&P 500 rallies, Bitcoin moves sideways for what feels like forever, and then catches up once again. And right now we're seeing the same story unfold. The S&P 500 keeps pushing to new highs while Bitcoin holders are capitulating left and right simply because they're tired of watching it move sideways. It wouldn't surprise me if Bitcoin catches up in just a few weeks of strong upward price action. The rally we've seen from the S&P 500 since April has been remarkable. It also wouldn't be surprising to see a short-term pullback before another move higher, which could easily scare investors and make them think the AI bubble is bursting. It makes sense that the Fed is being cautious about ending quantitative tightening and hinting at future rate cuts because the stock market is already sitting at such high levels. But with all that said, I still can't be bearish on either the S&P 500 or Bitcoin right now. Real GDP is sitting around 2%, and the expected number for Q3 is closer to 4%. The Fed is preparing to begin rate cuts and end quantitative tightening. The labor market is slowly weakening, but it's far from collapsing, and inflation, while still sticky, is below 3% and much lower than where it was just a few years ago. That's why the full reset scenario remains my main outlook. Bitcoin is still holding its structure, even though the recent sideways action and fear have shaken many investors. If we lose that critical level, then we can start talking about the cycle ending and looking at downside targets. But as long as we hold above it, I believe this is just short-term noise before our medium-term thesis continues to play out. And I don't blame investors for feeling nervous right now. Bitcoin has been moving sideways for months, and altcoins haven't been performing well either. Many people are still calling for a major bear market correction because they believe the 4-year cycle has ended. There's also growing anxiety around the idea that this bull market has lasted the same length as the last two, which makes some worry that history could be repeating itself. That fear is starting to show up in ETF outflows as investors pull money out of Bitcoin ETFs. Some are simply frustrated with the constant choppy price action, while others are tired of Bitcoin staying flat for 10 months as other assets like stocks and commodities continue to rally. But since I remain bullish on Bitcoin in the long run, I like to take a different approach using the 200 EMA as my main guide. When we're in the fair value region, I prefer to stay patient and not make many moves. When we're in the expensive or very expensive zones, I take profits. And when we move into the cheap or very cheap regions, I look for opportunities to accumulate more as long as my long-term bullish outlook stays intact. And honestly, it's hard not to be bullish because I can't really picture a future where central banks suddenly become disciplined and stop printing money. Even though price action has been frustrating, there's still plenty to look forward to. The crypto market structure bill is still moving through Congress despite delays caused by the US government shutdown. There's also a potential trade deal between the US and China on the horizon, and we now have a new pro-crypto head of the CFTC. In my view, the outlook for this entire asset class still looks bright. What's important is to keep watching market structure, making sure Bitcoin holds its macro uptrend, and staying open to different outcomes. Speaking of outcomes, we expected October to be a green month since it's historically Bitcoin's best month, but it ended up being pretty flat at around -3%. Some people now say November is Bitcoin's strongest month, but that average is being heavily boosted by the massive 450% return from November 2023. I can only imagine what that must have felt like for investors back then. That single month skews the data, so I prefer to look at the median return, which is around 9%. So from a seasonality perspective, November should be solid, but probably not as good as that inflated average suggests. As for MicroStrategy, it continues to struggle and still underperforms Bitcoin. Their recent purchases have been smaller, and even Michael Saylor's price targets have become more conservative. He's now calling for 150,000 by the end of the year, which might be the lowest target he's ever given. And because MicroStrategy is underperforming, it's also weighing on the NAV premium of other corporate treasuries. MetaNet too continues to face challenges. It looks like Coinbase is one of the few treasury companies alongside Bitcoin that actually has enough profits to keep accumulating Bitcoin and Ethereum. But we'll have to see how that plays out. I'm expecting a lot of volatility through November. Bitcoin is still holding its major pivot level around 109 kelvins, which dates back to December 2024. As long as we stay above that level on a weekly close, I have to remain short-term bullish. If that level breaks, then we can start talking about other outcomes and how to position for them. But for now, I expect support to keep holding until it doesn't. And speaking of support holding the fight for 4 kelvins, Ethereum is still ongoing. Once again, we find ourselves on a Saturday with Ethereum trading just under that level. It's managed to recover into the weekly close for the past 3 weeks straight. Can it pull it off again? We'll have to wait and see. Right now, just like Bitcoin, we're seeing some ETF outflows and corporate treasuries aren't making many moves. Even so, Ethereum's fundamentals keep improving. On-chain stablecoin volume reached nearly $3 trillion in October compared to the previous record of $2 trillion just a month earlier. That growth is staggering, and I can't bring myself to be bearish on Ethereum in the medium term with metrics like that. We're seeing a similar picture when we look at total value locked across blockchains. Ethereum still makes up more than 2/3 of all DeFi value locked, which reinforces its dominance. That kind of market share makes Ethereum a simple investment case for institutions. I believe Ethereum to Bitcoin is still consolidating before its next move upward. As for altcoins, they're still struggling. The altcoin season index sits around 43, which shows we haven't seen that clear breakout or sustained rally yet. A big reason for that is the Russell 2000. As long as the Fed keeps talking tough and delaying both rate cuts and QE, I expect the Russell 2000 to stay choppy since smaller companies are much more sensitive to high rates than the big names in the S&P 500. Until we see strong price discovery in both the Russell 2000 and Ethereum, I'm not expecting much from altcoins. That brings us to Solana. It's no surprise that price has been moving sideways given what's happening with Bitcoin and Ethereum. But the good news is the Solana ETFs finally went live and we've now seen 4 straight days of inflows. That's exactly the kind of momentum we want to see. It doesn't mean prices will explode immediately, but it's definitely a positive sign for Solana's long-term outlook. Solana continues to stand out as one of the clearest use case networks right next to Bitcoin and Ethereum. Now, there's a chart making rounds that I want to clear up. It suggests that without BlackRock, the Bitcoin ETFs would only have around 1.14 billion in assets under management, and the Ethereum ETFs would actually be negative because of the grayscale outflows. But this chart leaves out one major point. The funds that went into BlackRock likely would have gone to other ETF issuers if BlackRock's products weren't available or as liquid. Of course, BlackRock helped drive inflows through its marketing power and reputation, and they probably attracted some investors who wouldn't have entered otherwise. But the idea that all that money simply wouldn't exist without them is misleading. In reality, most of those billions likely would have flowed into other ETFs from different issuers if BlackRock's weren't an option. So I remain bullish on Solana and expect it to put in a higher low and then a higher high on its Bitcoin pair here. I believe the investment thesis for Solana is very simple here. All you have to do is look at stablecoins and tokenization. We're seeing huge growth in RWAs as more and more assets get tokenized and brought on chain. And you don't even have to get me started on the exponential growth we're seeing in stablecoins, as it feels like every single day now there's a major player like Western Union or Visa or MasterCard getting in on the stablecoin action, and I expect the growth to remain exponential for quite a while. So we'll see what happens. The performance versus benchmark over the past year chart is going to start looking pretty bad here because we're going to be comparing to November and December of 2024. But after so much sideways consolidation and so much time capitulation as investors have thrown in the towel, it's hard for me to imagine that this was just one big distribution when we've seen such a big reset. We never saw euphoria and the fundamentals just keep getting better and better. And that's why I'm leaning more towards this being a reaccumulation period and not a distribution period. One of the main reasons why I believe we still have higher to go is because the federal government is still running huge deficits. That trend seems to be worsening year after year, and we know that exponential debt growth results in exponential money supply growth as that debt has to get monetized and the fiat currency gets debased. And because we price our risk assets in that devaluing fiat currency, we can expect more upside for risk assets like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.